All right, my BiggerPockets brothers and sisters, coming at you with another video. It's Jesse Fragale. So what I thought we'd do today is get into scaling in real estate, whether that's moving from no properties to getting into single family homes, or moving from single family homes and getting into commercial, or just generally taking yourself to the next level. We're gonna talk about that today. I think to maybe explain how scaling is possible and how you can really go from single family and not be scared to move into other areas of commercial real estate or have the courage to take the plunge is by explaining the way that I did it personally. And I talked a little bit about this on my podcast interview with Josh and Brandon, so you can check that out. We can put a link below. It all started for me in student rentals. I was in college at the time. I think I was 19, and I started getting the itch to invest in real estate. And I saw that people around me were investing in university towns. I saw the person I live with, his dad owned the place. And I thought, it would make sense to have people just pay you and, you just own it and collect the check. It sounded so simple at the time. I also had the benefit of having a father and mother who were supportive about that. Not in the initial one per se, because they thought I should focus on school, but I had other people in my family that were friends of my parents that did real estate, invested in real estate, and it just showed that it was possible. So I was fortunate to have that. I know not everybody does, and it takes people sometimes longer to even think that it is possible. So long story short, I got into it with a property that I can remember today. It was $245,000. Like I said, I was 19 or 20 years old. There were 5 girls there that were close and going to the college. So they were close to the college, attending it. And I remember like it was yesterday that market rents were $500 a person. So 5 girls times 500, 2,500 times 12, $30,000 for the year. The reason I remember 500 is because that's where market rents should have been, and they weren't paying that. So I thought there was a value add component to that, and I didn't even know what value add was at the time. So I got this property, and unbeknownst to me, some of the tips and tricks and heuristics that we use today, like the 50% rule, you can check that out on BiggerPockets, just go in the forums or go on YouTube, were things that I was already doing. I was looking, $30,000, so that means, if I'm getting $18,000 of NOI, what kind of yield does that get me? And in my market, it was amazing. I know some markets, they would be pretty upset with that kind of return, but my market's much more similar to New York, LA, so yields, even then, were still pretty low. So anyways, that property, it was on a street called William Street. A few years later, maybe a year and a half, I think because we were taking advantage of the fact that there was appreciation, I think I refinanced that property, and that's what got me into my next property. And that was on a street called Marshall Street. And that had 6 gents, some guys that played sports in the school. Learned a lot about the difference between girls living together, guys living together, girls and guys living together, which in my opinion is the best. Everybody tries to behave themselves, kind of. So I moved to that property, and that property was number 2. And I kept this pattern going, and I eventually got up to 4 properties in the college area. One of them was at a different college, and part of the reason for that purchase was my sister was going to teachers college at another university. So I checked that market out, and I purchased that, and I got up to 4 properties. And part of my goal at the time, for whatever reason, I thought getting to $1 million in terms of valuation, not in terms of equity, but valuation. For some reason, I thought it was cool or whatever. That was my goal. And that's, I think, one of the benefits of real estate in general. It's how scalable it is, and that you should have these short-term and long-term goals. Another goal of mine at the time was to get featured in a Canadian real estate magazine that I always read, and it was part of my education to get into real estate. And I was lucky to get a little bit of notoriety in 2 national magazines at the time. And that actually helped with some of the banks I was working with, and a little bit of credibility. It was always something that I thought, it probably won't hurt to have that kind of exposure. So anyways, those 4 properties I held for years. I mean, I only sold them, I think about 3 years ago, you know, some at different times, but I sold them within a year and a half. And when I moved and finished university, started working downtown, I was in a great market. That's when I really started getting into condos. I started purchasing condos with not the intention to flip them. I've always been a cash flow buy and hold type of investor. But what I was thinking was that if I bought these condos, you know, that were cash flowing, if there was appreciation and I could capitalize on that, then, you know, I'd have the option, if I wanted it, to sell those and maybe parlay that money into something bigger. But those 4 initial properties that I bought, those properties allowed me to break into commercial for a couple reasons. Number 1, when I sold them, they all had appreciated quite a bit. Number 2, the amortization, the pay down on the loan was decent. It was a good chunk of change. And number 3, and this is one that I held out for a long time, and that was partnering. As many of you know, I'm an agent in commercial real estate. I work in the office side, I'm on the corporate side, but my partner today, Jonathan, he works on the multi-family side, apartments. And so he buys for clients $10 million, $20 million, $50 million apartments, stuff that we hopefully we'll be able to afford at some time, couldn't at the time. And I saw that he was in that market, and that was somewhere I wanted to get. He had a great balance sheet, never bought a rental property. I had a bunch of debt, but I had a little bit more know-how when it came to actually being a real estate entrepreneur. And we teamed up and started hunting for an apartment. So that's the one you see on your screen now. We purchased that. That was the first apartment building that I ever bought. That was an 11-unit apartment building. Own that today. And you know, the rest is history. You know, our goals now, as we move the goalpost further and further, is, you know, get to 100 units, you know, over a certain amount of time. That's our goal. And I think the beauty of real estate is that it is scalable. It's one of those industries that, you know, once you get one single family, all of a sudden you think, or you have now socialized yourself with the idea of getting 2, or the idea of getting 5. Then when you get 5, you meet somebody that's doing retail plazas, or you meet somebody that's doing commercial or industrial, and you're just like, well, if they can do that, maybe I can get into that. And you really can build something. So I thought I'd share that story, and you know, hopefully it helps some people out there that are trying to get from maybe not even having bought their first property to the first one, and then maybe moving from that first one to multiple, or if you want, moving into the commercial side, because it's not for everybody, but I think it's one of the most lucrative places you can be in real estate, especially on the apartment side, because you can really scale under one roof. And yeah, I think hopefully that's helpful. And if anybody has any questions, let me know. Subscribe if you're not subscribed, smash the like button, rate in the comments below, you know, how many Luigis out of 10 is this mustache doing? And yeah, listen, I'm happy to share more. Just let me know if you have any questions, and we'll catch you later.